You're listening to REIA Radio, the nationally trusted name in real estate investing. We dig deep to discover investors' why in real estate. If you want to skip all the BS and get in investors' heads, you're in the right spot. Be one of the thousands to check out REIARadio.com.
Credit matters, but if you can look back, it's like, oh, you have a 590 credit score, but it looks like you pay everything now. You make 5x of what the rent is. We're going to rent to you.
Well, and to that point too, like when you check credit, you can't just go off the credit score, right? Because if you look at the report, it tells a story. You can see like I had cancer during 2022 and I lost my job and I have medical collections. That's why my credit score is tanked. Okay, that makes sense to me. If you're just habitual about not paying for stuff, then that's a whole different story. So you got to kind of look, you got to go beyond the score itself into like the actual story.
Welcome to REIA Radio, episode 294 with Dane Peterson,
the mystery guest. So Ted, a little backstory. First of all, I didn't even know, Aiden didn't know we had a podcast today, although we were planning on it. And I put it on the wrong calendar. We have a shared calendar, and Ted put it on the wrong calendar, like his personal one. So I'm like, podcasting, not podcasting. And then we go to the REIA luncheon, and Ted's like, I got a mystery guest for you today, because I had no idea. And I'm like, who is it? He wouldn't tell me, wouldn't tell me. Get to the studio. In walks Dane Peterson, who we've been trying to get on here for years. How long, Dane? Probably a year and a half.
Since I've known you, probably.
So this is going to be a lot of fun. Gotten to know Dane a little bit through a coffee meetup that we go to, and Dane's a stalwart at attending those.
That's a new word.
Unlike Ted. And this is going to be a lot of fun.
So, I was there just yesterday.
Oh, yeah. You make a cameo every once in a while. So, Dane, welcome to the show. Appreciate you giving into Ted's badgering, relentless badgering here. So, let's get into this, man. Give us kind of a backstory on who you are, what you do, and then we're gonna kind of fill in the blanks here along the way.
Sure. So I'm 39. I've owned an independent insurance agency for about 12 years. So that's my background there, and we still own it there. And we started buying properties just over 4 years ago in December.
Okay.
So over time, that's what we've got. And
now you hail from Council Bluffs, Iowa.
Correct. I went to
CB.
Lewis Central.
Represent. My kids go to Lewis Central. Great school.
You guys are so funny.
And so we're gonna spend some time talking about the lovely hamlet of Council Bluffs, Iowa today. In addition to all the other types of investing you're doing, and you've got quite the story, especially considering 4 years of experience doing this. The first time I remember hearing your name was on a deal I tried to buy on Pierce Street. You remember this?
I do.
You still own it?
Yeah. I think you're still mad about it.
Yeah. The 8plex.
Some hard deals
but
here.
It turns out apparently it's not that great of a deal in hindsight, right?
No, that's a good one.
Yeah.
Okay. I like that one. I got plenty of other bad ones you could have, though.
So I think memory serves, it was on the market for like $420, something like that. Does that sound right?
Yeah.
It was really good price for an 8plex. And then you snaked that deal, and I was like, who is this SOB? Dane Peterson. And then so you were like this mythical character that I had no idea who it was until you show up, and I'm like, you're that guy. So
that's what Cathal said too.
Yes.
Were you actually putting money out there to get leads, or how did you find that?
No, this was on the market.
Okay.
Yeah, I was on market, and so he beat me out.
I didn't know if you guys
are bitter ever since.
I didn't know if you guys are both doing mailers and both walked in at the same time.
I don't remember who had it listed though.
I don't either, but yeah, Jay was because Jay we wrote the offer through Jay, who's a mutual friend now, and you ended up getting the deal. So
he wrote it for both you guys?
No, just me.
I was like, that's a win-win situation for him.
But what he said when first time I met Owen, he said the same thing about the deal. Then the first time I met Jay, he said the same thing. I was like,
yeah, that stuck. Yeah. It's one I missed out on.
I didn't know any of this.
Yeah. Okay. You so grew up in Council Bluffs. You were a wrestler. Yep. So sports were important to you when you were growing up. Is that fair to say?
Yep. So
you were pretty good.
I guess, but I went to St. Albert most 7th through 10th just because I couldn't make the lineup at Lewis Central at that time. That was their heyday. And then some guys graduated, and then I moved over to Lewis Central my junior year.
Yep. And you have you're married, and you have 4 kids.
4 kids.
And what are their ages?
7, 5, 4, and 2.
Wow.
2 boys, 2 girls.
Your hands are full.
Yeah. That's a lot,
Yeah.
especially those ages.
Yeah. My wife does a lot.
Yeah. No, that's cool. Now, is your wife working now, or is she?
Yeah.
Yep.
So she does. We manage all of our. Well, now we manage all of our properties in house, and she has a lot to do with that.
Okay.
So I would say that she does the majority of it, actually.
When was the first time you mentioned you've owned an insurance agency for a while?
Yep.
And you're doing well at that. I understand, but it's not necessarily something that you love to own and operate. Is that true?
Well, I mean, there's two things to it. It's just so competitive, and it's really, really hard to keep a client because rates are so volatile every year.
You get shopped all the time.
Well, yeah, I mean, we're a broker, so we can do that. But at the same time, it used to be, your homeowners used to go up 3%. Now it's going up 20, 30, 40, 50.
Year over year.
Year over year.
Yeah.
And then when I built that business, I didn't do a great job of staffing it.
Mm-hmm.
You know what I mean? I'd always have like one assistant. You know what I mean? That would do things. And then, you're getting beat up. You're getting text messages on your cell phone at 9:00 at night, and instead of people contacting your office and, staffing it appropriately, which I did not do.
Have you figured that out now?
Oh, we're getting there. I have a lady there. She's been there almost a year, and she's great. And
take some of the pressure off.
Yeah. I mean, we get it. So where she's doing the majority of it right now, not the majority, but a lot of your service stuff.
Hey, I was curious about this. So in that, it's well documented now that insurance rates have continuously climbed, especially in the last 4 or 5 years, right?
Yeah, I mean, last 10 years, but
so okay. Selfishly, as an agency owner, a broker owner,
mm-hmm.
do you make more money when rates go up like that?
Yeah, but you lose clients.
I see.
It's just like real estate, right? If you're going to make 6% off of a $400,000 house, you're going to make more on that than a $200,000 house, right? But when everyone's rates go up, you lose people, though, just because they're shopping even harder. I'd say 3 years ago was really brutal. I mean, you had multiple companies taking 100% increases.
Wow.
And multiple companies leaving the state. So leaving the state is the worst. So like Iowa Mutual was a huge one. We had 200 clients there, and we had every one of them gets a letter saying that, hey, you're being non-renewed. So we have to move them from A to B, and we're comparing it to last year's rate, where everybody else is this year's rate.
Mm-hmm.
So, I mean, even to keep like 75% when something like that happens is really difficult. And we've had that happen, call it 5 times.
Is there a 55% increase in insurance and auto rates since 2020 nationwide?
Wow.
With some cities seeing as much as 60% increase.
I mean, that'll just crush you. I mean, especially not, single family is one thing, but when you get into multifamily too, that kills your value of the property because your NOI gets, cut 10% at a time when stuff like that happens. Yeah, it's tough business, I would imagine. Okay, so at what point did real estate kind of come on your radar and how?
So a good friend of mine, I don't know if I'd call him an investor, real estate agent, but he's been around a long time. And he had a lot of clients that he referred to me that own, 20, 60, 100 properties. And then he owned a lot himself too. Mm-hmm. So I was around it a lot. I should have started a lot sooner, basically, because I understood it. Because when you're on the insurance side of it, you're constantly getting the banks requesting certificates of insurance. Mm-hmm. And it's like, oh, what are these guys doing? And you figure it out. It's the same thing I'm doing. And you've done, when you buy it and then refinance it, et cetera. I was just late on it. But I mean, I still, to this day, have a ton of investor clients, with 20 to 200 single families.
Uh-huh.
If you want to refer them to the podcast, just let me know.
No,
I'm sure some have been on here.
Yeah, that's really interesting. So it sounds like it's almost a fight for attrition or to kind of like keep your existing clients as more of what you're dealing with recently. Yeah.
That's all of it. So basically, we'll get a renewal that comes in about 30 days in advance.
Yeah.
And right when that comes in, we'll requote it.
Mm-hmm.
Okay. Now the
That's
goal is to requote it and reach out to them before they get it. But some people, they get it in the mail and you get the email, you get the text or
we already moved. Yeah.
I mean,
cancel my policy.
So you try to do it as soon as possible. You know what I mean? And then some people we'll send it to them in an email and then you'll get a cancel and you're like, well, what's going on? This was $3,000 less and we didn't hear back from you. Oh, I don't check my email. Great.
Yeah.
So you try to get ahead of it, but.
Well, walk us through your first deal. What was it? Where was it?
Oh,
give us the details.
Super great. So I went regular conventional loan, put 25% down on a celebrity home in Bennington.
Okay. And at the time, were you living in Council Bluffs, or were you living where you are now?
I haven't lived in Council Bluffs since high school.
Okay.
So no, I was living in Millard, but I didn't, at that point, it was like, oh, I don't want to do a fixer upper. I don't want to do anything like that. So this is safe. And just you put 25% down. Now I don't want to leave any money in.
Yeah.
Right. And that money's still just sitting there.
Yeah.
On a 30-year note.
Do you still have it?
Yeah. It's like 3% interest.
Oh, well, yeah. That's
I know,
hard
but
to, hard to get rid of.
So the same thing. It's like, but now can you imagine buying a single family and leaving, I can't remember what it was, like 80 grand in it. 60.
No.
It's just
a single family.
Right.
Yeah.
It's like now you think about it, you're like, that was so stupid.
So you,
but those are learning lessons, right?
Right.
What did you buy it for? Do you remember?
I think it was like $250.
$250 for a single family.
Yeah, it was 4 years ago in December.
Yeah, yeah. And okay, so you still own it. What's it rent for?
That thing's been a dog since I bought it. I mean, honestly, I think it's like $2,100.
Okay.
Which when you look at cash on cash, I mean that's terrible.
Yeah.
Everything about it.
Yeah. Well, I mean, tuition, right? $80,000 and you got a degree and got your first deal, right? That's kind of how you got to look at it.
So, I mean, now that I think we talked about the other day, we've been starting to do some wraps, and that would be perfect.
Okay.
Because I have a 3% interest on it.
Yeah. Okay. So the first one, you left a lot of money in the deal. Realized now that was a mistake. How did you progress from there? Were you like, did you realize that immediately?
No, I thought it was great.
Okay. Okay.
Crushing it.
Yeah. And did you handle the lease on it yourself?
Yeah. The first one we did.
Okay. So got the first one under your belt. How long until the next one happened?
Like 3 or 4 months.
Okay. So you had the bug at this point?
I still didn't know what I was doing though.
Sure.
And at this point, was every house that was listed every house that was listed was going for highest and best. It was during that era.
Yeah. So this would have been 2022, 2021-ish.
Yeah, 2022.
Yep.
So every house was going for it. And then I still had the thing in my head. It's like, well, I only want to buy in really, really good neighborhoods.
That's not the case now, right?
No. C plus, B minus, I'll live there.
I do like the approach of having different kind of like asset types in different areas though to kind of diversify a little bit. Because I mean, Bennington's a pretty sweet location.
That's the only one I have in Bennington.
Okay. So give yourself some grace. You were learning along the way. What was the next deal you got?
So I was going to do a burr on my next one. And it was by Hillside Elementary. So that
I grew up over there.
Yep,
on Western Street.
Yep. So I still have it. This is my only Airbnb.
Okay.
It's been an Airbnb for 4 years or three and a half, but that's on 76th and Hamilton. So same thing here. I bought it. I put it big, it was a big lift, rehab. And I had to leave 60 grand in again.
Yeah.
So
it's a little less.
Two in a row, completely bombed.
140K out the door.
Pretty much. So that's my first 2 right there.
Yeah. Okay. So how are you figuring things out? Were you listening to podcasts, reading books, talking to other investors? Like, how are you getting information on how to get better? How did you even know what a burr was?
Yeah. I mean, so like I said, I have a friend that's been doing this. He's an agent. He's been doing it for forever. And he was kind of helping me. But yeah, I have podcast, books, anything that you can think of, probably read it or listen to it. But yeah, I mean, a little bit of both.
Got it.
But I'm not afraid of like a lot of risk. So I mean, like I will leap on stuff like that.
Yeah.
But then when you do a terrible job, you're like, this is not going to happen again. How do I get better at this?
Okay. So
that's what we call the failing forward section, right?
Yeah. Now, so you went from a kind of more or less a turnkey rental, single family rental on your first one. And then you pivoted to a pretty heavy lift. It sounded like a big rehab on your second one.
Yeah, it was everything.
Talk about that for a minute. Like, did you have a construction background or had you done remodeling projects yourself or
0? Okay. None.
So you got some advice or you figured out, okay, I need to add value to this to create some equity.
Right.
What was the process like for finding, how did you know what to do next?
I just used a friend of mine's crew.
Okay, perfect. So you got a referral.
Yep.
Used a contracting crew and you went into the house and how did you know what to do?
I didn't. I just did what he told me to do. At all.
It's school, right? I mean, that's the whole process. You get it done, and then you have some confidence, and the next one you succeed even better.
That's the best thing about referrals, though. If it's somebody you know, like, and trust, and they've used somebody multiple times, that you can kind of fast forward a little bit through the honeymoon phase of like, is this person going to screw me over? Are they be honest? That type of thing. So he kind of gave you some you're like, what do I do here? Or like, what do you think? And he gave you feedback, and here's what I do for other people. Is that kind of how that worked?
Yeah, and I mean, it's kind of like where I am or where, a lot of investors like that, they have their own crews.
Yeah.
if you have enough work, I mean, you can keep them busy at all times. And so it's basically just do what you would do.
Mm-hmm.
I think the best referrals are the ones that give you all the positives and negatives about the person.
Yeah.
Right.
Like, hey, this is what's really good about them, but they are not going to get the job on time. And, if they give you this date, double it. Whatever it is, whatever that thing is about that person, give me all the negatives, but also give me the positives on that person, just so I can expect the best and worst. Also, as a person referring, I don't want you to be pissed at me.
Right.
Yeah.
Well, that's what it is too. It's like you'll give somebody's phone number and this person sucked. They didn't call me back. Well, don't use them.
Yeah.
They were great for me.
Yeah. And we've talked about this before, all three of us here, but I've gotten to the point now where, to your point, Ted, like I hate giving a referral and then they do a crappy job for somebody that you like. And then they kind of throw shade at you, or they do it in a half kidding way.
Or they background check them and they find some shit in their history. I'm like, hey, it's a contractor. You're going to get that shit.
But I always give the caveat, like, they've done a good job for me. That doesn't mean they're going to do it for you. So buyer beware type, but it doesn't always work out that way. They still get bitter. Okay. How long did the project take? Your second one?
Like 3 months.
Okay. 3 months. And then you went to refi and did it not appraise, or did it?
Correct.
Okay.
This was when interest rates were still good too. So it didn't have anything to do with the DSCR. So it just, the appraisal bombed.
Got it. And
did you try fighting it or anything?
Yeah, but I didn't know what I was doing.
Yeah.
How much do you think you spent on the rehab?
Like 60 or 70.
Okay.
Which now I would.
So you got some of it back.
Yeah, but.
Okay. I'm just trying to make you feel better.
Right now, I mean, I would say that we'd be in and out of there in 3 weeks and it would be like 40.
Okay. Got it.
So just the way that things have progressed over there.
Okay, let's talk about, so you're getting your legs under you. You did a turnkey, then you did a heavy lift, realized you left a lot of money in the deal. How did you adjust that? Like, what was the process change that you went through to find better deals that would actually cash flow and you didn't have to leave, tens of thousands of dollars in it?
I just kept buying, got
better each time.
So then my next one was in Rockbrook.
Okay. Great area in Omaha.
Great
That's where my kids go to school.
It's on the south side, though.
Okay.
Not
I know the
north side.
Not the fancy pants neighborhood.
But my wife has actually me searching that area for a house for the next house.
That one. So I think I had to leave like maybe 10 into that one.
Mm-hmm.
But it was I hired my own people on that one. And let's say that one took a month and a half.
Okay.
So, I mean, we were getting better, but not where we needed to be.
What are you like with each one of these projects that as you're going? How involved are you in each one of these? Are you like working in the day to day? Are you in the house every day with them? Or are you just like checking in like every couple of days and just directing traffic?
Yeah, I'm not there every day.
I mean, even in the beginning days.
Mm-mm.
And because you still have your insurance company to run, and probably you're starting to have babies at that time, and
and at that time too, I was still coaching full time.
Yeah,
so that's
coaching,
wrestling, 11 months out of the year, practice 3-4 nights a week.
Not for your kids, but for
then you travel, because it's club, so it's kids from any and all schools, right?
Yeah,
and I mean, you're traveling, I don't know, 20 weeks out of the year.
What group is that?
It's MWC Wrestling Academy.
Okay.
It's a club. It's not affiliated with the school.
Yeah.
So now I just do little kids, and that's only 4 months out of the year, and my kid's there. So it's very, very different than what it was before.
Huh. No, I love this. So, okay, walk us maybe you've got a lot of stuff. So how have you progressed, since those early buys? And it seems like you've kind of systematized things to an extent. You've got your own crew.
Yeah.
You at some point kind of started dipping your toes into different parts of town, like to your point, like CC plus type areas.
Right.
Like, what was that like? What was the difference, and how did it work on the back end when you were refinancing? Did it work better?
Yeah, I mean, but you got to remember at that time too, though, I didn't know very much about commercial banking.
Mm-hmm.
And it's kind of like insurance, right? Whether you go to A or B, and they're going to have very different term sheets. Like when I first started, all I was doing was 25-year loans.
Mm-hmm.
I don't want a 25-year loan on a single family now. I do 20s, which most people would disagree with me on there, but your payment is so close to what it would be, and I have another business.
Mm-hmm.
So I would just say I got more educated on banking. Instead of just using a referral, I found my own, and then we just kept buying. So like when we were done with one, I was looking for the next one. I was just trying to improve and get better on them.
Okay, so I know that you have this successful insurance company, and I don't know what type of money that's bringing in, but you're leaving quite a bit of money in these deals.
Tons. So that was all like my whole savings at the time.
Okay, so that's what I'm getting at. Like, where's this money come from? Are you taking lines of credit out? Like, how are you getting this really going?
I didn't have lines of credit at the time, so I probably started figuring it out about like 7 or 8 is when I started to get better. And then I found a crew and I got to use them all the time.
Mm-hmm.
So that helped a lot. I got my costs down and I really didn't have to provide a scope of work or, it was just do what we did last time.
Do the same thing.
Do the same thing.
Same paint color, same trim, same everything.
Same everything. And then I took out a HELOC on my house. And then that changed everything.
Okay. So loosen up the reins a little bit.
Yeah. And it was
what was that conversation with your wife when you're taking HELOC out? Was that a concern at all?
No.
Because my wife didn't have that conversation when I started buying houses. It's like, you can do whatever you have to, but you can't touch the house equity. That was her one thing.
Mm-hmm. You're borrowing.
Yeah.
You're borrowing. Lines of credit are super powerful. There's a lot of different things you can do with them because you don't pay it unless you use it.
Yeah.
Whereas, you just go take out a loan. That compound interest starts day one.
Yep.
But once I got the line of credit, then I could start buying 2 at a time.
Mm-hmm.
And then so that changed a lot. Prices went down. They didn't go down, but there was less offers.
Yeah.
If I'm the only offer on a house, things change drastically. There's no highest and best anymore, no escalations.
Okay, even though you've been doing this for 4 years, right?
Mm-hmm.
You've been through almost a market cycle in that you had really hot times where it was highest and best, all cash, it's really hard to get a deal,
mm-hmm.
to a little bit more of a buyer's market that we're in now with higher interest rates. What do you prefer as somebody who buys a lot?
Right now I think it's definitely a buyer's market right now.
Uh-huh.
And if you're not, what's going to happen when rates go down 2%?
Yeah.
A lot of people are going to be buying, right?
Sure.
So, especially if it's something that's livable, if it's a dump, it's just me and 5 people I know bidding on it,
mm-hmm.
But when it's livable.
Yeah. Then you're getting owner occupants that are entering the buyer pool, not just investors.
Right. And they're going to pay way more than we would.
Yeah.
So, but yeah, our buy boxes just changed too. We did a lot of north. Once we got going, we started doing a lot of north of Sorensen.
Mm-hmm. Which in Omaha, that's kind of North Omaha, is maybe a little bit lower income area. The house prices are lower than your premium parts of town, right? And then, okay, so
I would say it's a better part of North Omaha.
Yeah.
One that we like to buy in. So we did probably 20 or 30 Section 8 houses there.
Mm-hmm.
We still have them. Like 3/4 of them do really well. But when Section 8 houses bomb, they really bomb.
Meaning the turnover is a lot tougher because there's more damages and repairs and that kind of thing? Or what's, I guess, give us kind of a peek behind the curtain here.
Yeah, if you get somebody in there that doesn't know how to take care of a home.
Sure.
They've never lived in a home there.
They're pigs.
No, or they're
My words.
or they're not from here and they don't understand exactly
they start a bonfire in the tub to cook their food.
Yeah. So we've had two of my worst turns have been both of those. But then we have Section 8 houses where we never hear from them and they'll stay forever. And we'll do our inspection. It's cleaner than my house.
Yeah.
So it's just really. You got to vet them. We still make them apply.
Yep.
We still run background checks and things like that.
Now, so okay, you got obviously quite a big number of Section 8 rentals. Do you like those? Is that the way to go?
Yeah, but it's changed though. The rents have changed.
Mm-hmm.
When they went down.
Yeah, which so any listener out there that is catching this that's wondered about Section 8, can you talk about that? How do you find out what you can actually get for rent and things like that for people that don't know?
And your grandfathered into what you got, right?
No.
They actually it comes renewal and they're like, nope, we're going to pay you less.
Yep.
Yeah. So it's not a big deal, but a little example, one of our houses, it was renting for $1,800 and they changed it to $1,775 and we invoiced her and she just doesn't pay it. What are you going to do? Evict her over $25 a month? She has one work order a year.
Yeah.
We never hear from her.
Yeah.
Now, it's going to, put a little dent in your NOI, but at the same time, it's I'm not going to mess with it.
Okay. So I don't have a ton of experience with Section 8. Most of the Section 8 leases that I have had have been a byproduct of me buying a multifamily property where they were already existed. And so I haven't been through the process of inspections and approvals and getting all the stuff lined up from a, paperwork perspective. I was curious about this. Does government shutdowns affect Section 8 payments?
I haven't had it affect any of our payments, but I know when people applied before, they weren't able to get their application fees covered by agencies. Most of our Section 8 in Omaha was staffed from a third party that we've used, whereas some of these towers are being shut down in Omaha.
Yeah.
You've seen this?
Yep.
And so they'll bring in a company.
City View.
Yeah. Okay. Yeah. I know there's one in South Omaha right now.
Yep.
that they're all being displaced. So we used a third party, and they would say,
Or should
okay,
I do something with Pine Towers personally?
they'd be like, okay, Dane and Mindy, what do you have available? Well, we have a 3-bedroom. Well, we have these people. I think this one would be good. So that was great because we didn't have to pay a leasing agent. Our vacancy time was nothing. Nate Eccles has used them too.
I didn't even know this existed.
Yeah, they're good, but they'll get X amount of vouchers, but then they're gone. So then you buy a house, you're like, okay, I'm ready to be leased, Jennifer. Well, we don't have anything. So you wait till they get their next batch of vouchers on there.
Interesting. Now, we talked at a meetup specifically about Section 8 and like subsidized housing and about the rate differentials that they're paying from 1 year over year. I remember printing out that sheet and we were kind of going over it, like, here's what they pay for a 4-bedroom, here's what they pay for a 5 and a 3 and so forth. Do you have a typical, like you mentioned your buy box, is that like, do you only buy 3 bedrooms? Do you buy any size, or like what is your kind of like cutoff there?
Current or just with Section 8?
Actually, both.
Oh, current, anything that pencils.
Anything that pencils. Okay.
Right. But as before with Section 8, I mean, so if it's apartments, 2 bedrooms are really good. So as far as a house, we have some 3 bedrooms, but if it's Section 8, I want 4.
Okay.
Like before they changed
because the delta for an extra bedroom, that 4th bedroom, is well worth it. Right.
And they have stupid rules too on, like, I've had a 4-bedroom home and they're like, oh, can't count this. So it's like you can't walk through one bedroom to get to the other, like just stuff like that. But no, 4-bedroom, it used to be like just, like quick underwriting, 3-bedroom, 1,600, 4-bedroom, 1,800, 5-bedroom, 2,000. But then it's all changed, on per zip code, per who they are.
So most, like in Omaha that you're talking about, they have a list. So if you go, isn't it HUD? Isn't that where you go to? Or I can't remember, the Omaha Housing Authority. I think they have that.
Yeah.
But you can, if you're not in, from Omaha or the Nebraska area, your local municipality will probably have a housing program, and that's where you go to find that. And typically they'll have a sheet of what the payouts are for different bedrooms in different zip codes, right?
But Council Bluffs Section 8 is drastically different.
Yeah, talk about that.
I don't know the exact number, but the tenants paying 30 to 40% normally. Like the ones that we like in Omaha is where they pay it all.
Oh, really?
Yes. I mean, there's tons of those.
Yeah.
Where they pay 100% of it.
Okay. So basically they'll subsidize part of it in Council Bluffs. So this is Iowa versus Nebraska we're talking about here. Council Bluffs, Iowa. They'll make the tenant pay, you said 30 to 40?
Something like that, yeah.
So they make the tenant pay part of the monthly rent, and then you get a check from the Housing Authority or Section 8 for the balance, or vice versa. What happens if a tenant makes a partial payment?
We don't take
Let's say. You don't take it, so you just reject it.
Yeah, we don't take partial payments.
Okay.
So, I mean, I guess with Section 8 you do. So let's say Section 8 is going to pay $700 and their portion of it's $300. It won't let them pay $299.
Okay.
But that's not with just Section 8. That's with anybody. We don't take partials.
And now, does that money come to you directly from the tenant, or do they pay Section 8 and then they disperse that to you? How does that work?
So we get a one big payment from Section 8 a month.
Okay.
And it'll have everybody on there that we have from Nebraska.
Got it.
Okay. And then the tenant will go on the portal and they'll pay their portion. Yep. Correct.
Okay. So you don't even have to mess with the collection part of it from the tenant.
Yeah, we don't do. We have it all set up where anything and everything they do has to be on the portal.
Okay. So you've really done this at a pretty fast clip, and I know you're still buying all the time, and you've gotten into some different, asset types and stuff as you've gone along. Do you like single families or multifamilies more of your jam now? Like how's the feel?
I like them both, and I'd like to keep buying both.
Okay.
Single families, the more times you can close and do what you say you're going to do, the more deals you're going to get.
Yep.
Whether that's from agents or wholesalers or just referrals from people that need to sell something. You close on time. You don't give them any crap about.
You're not a headache.
Yeah, you're not a headache. You're not a headache. Which I mean, I'm sure plenty of bankers definitely would say that I am. But just do what you say you're going to do, and I mean, more deals are going to come to you.
Yeah.
But I like singles. I think they're easy. They're quick. The appreciation on singles is great.
Yep.
But multi, my first one that I got a couple of 8s, a 6, some duplexes, but the one that I just got, I mean, that's a totally different ball game.
Yeah. And we definitely want to dig into that if you're okay with talking about it.
Yeah.
Okay. So when was your first multifamily purchase? So you're buying singles like on a regular basis.
You know what it is.
Yeah. I know what. So it's the Pierce
that
Street
smirk
HELOC?
that you guys had between each other. I feel like there's a story there.
That was it.
Okay, talk about that. What's it like going from single to multifamily? What did you think beforehand, and what did you realize afterwards? Maybe that was different, or did it kind of like fit what you expected? What are the gotchas?
Parking. So parking on multis is a really, really big deal.
Yes,
and there's like no parking there. But there's plenty of street parking. There was 8 units there. There was like 5 different voucher programs going on. Just, Heartland, because Heartland's got like 20. They have like 5 divisions.
Heartland Family Services.
They have like.
Are they outside of Omaha or Nebraska?
We're talking about Council Bluffs.
Yeah, I don't think they're in Omaha, but so it's huge company, but they'll have one for like.
Are they nationwide is what I'm getting at?
I don't know.
I don't know either.
But they'll have a division for like mental health or like abused women or you're being released from prison. Like all these different things. Okay. And we've been burnt on some and not on the others. So it's just, we're pretty picky on what we do. But the biggest hurdle that we had there was Heartland moved somebody in there. She was homeless. Fine. Great. Here's an opportunity. They're paying 100% of the rent. Great. So we found out she moved her boyfriend in, who was also homeless. Annoying, not the end of the world. But what they were doing is in the common areas, they were letting all their homeless friends sleep there and using our door codes. So we had like 3 of our best tenants move out.
Because of that.
Then I called Heartland. I mean, because they have their own caseworker, right? So I can't remember her name, but I'm like, hey, this is what's going on. We're either going to evict her or she can leave immediately. Because if she gets evicted, then she's going to lose her voucher. Right. But now I have 4 vacancies and 4 unit turns.
Well, each one of those people that were in the hallway needed a place to live.
Yeah, I mean, but we didn't have. Well, I didn't even know their names. But we were getting pictures. Like people get on your CRM and they'll put in like work orders or whatever you want to call them. But then be like a picture of a homeless person in the hallway. Like, what is going on?
Yeah,
So it's like, I mean, I get it. I wouldn't want to live there. I wouldn't want to live there either with that. But that building is also right next to Heartland Family Services. Where I don't know if do they give out meals there or anything? Do you know?
I don't think so.
I don't know.
I haven't had a good homeless experience. I like as an Airbnb host, every situation where I had where an organization, I think Heartland did one of them, or Lutheran did another one. Each one of them like destroyed my Airbnb.
Really?
Like destroyed it, like thousands and thousands of dollars of damage. And then I remember this little 2-bedroom Airbnb I had on Reese Street. The people I bought it from, older couple, obviously come from some interesting times, but they had an unfinished basement. They kind of put some make easy like bedroom down there on concrete. And then they would let homeless people sleep there for like $10 a night. Fun part is the person I bought this from, the dad died. The kids didn't realize that they had this rental property. So they lived there for like 3 years without.
The kids did?
No, these people lived there
the
for
homeless people.
No, the tenants lived there for 3 years, never paying rent.
Oh,
with a side business.
With the side business, yeah, and they're like in their 70s, and then they're letting homeless people live in the basement, and then they did like the carts and the Latino community with that sold the snacks and whatnot. So all the carts were in the back, and then they didn't have utilities to the house that we're on. So they had one room that was like the poop and pee buckets and all that. And then the basement had the homeless people. And then the front it wasn't a terrible area, but the front was just riddled with bullets all the way across.
Holy smokes.
And I started
it's like, I'll take it.
For $40,000. Yes,
Deal.
I will. And I sold it for $185. But in the end though, I was asking one of the neighbors, I was like, what's up with the bullets? Like, one of the homeless people they let sleep there one night was, had a drug related issue and they did a drive-by in the house.
Wow.
So like it just doesn't ever win. Like you want to help people out and give them a chance, but I mean some of these people are homeless for a reason.
Yeah, because they don't know how to live in a home.
Yeah,
so we won't take them anymore.
And that was actually one of the people. That was one of the people said that that was homeless. Like my last homeless person I had, her friend in California put her in the place to get away from her domestic issue.
Right.
Shows up with the kids, and then at one point I'm checking on a place, and somehow the plumbing came disconnected from the sink, and then they put a bucket underneath the sink instead of calling me on this Airbnb. And then I get the call from the neighbor below that the water's pouring through the ceiling. Right. Well, I'm sorry, I just never owned a home before. I just don't know what I'm doing.
A quick story. So I had Heartland Family Services. By the way, I don't want this to make it sound like we're bagging on them.
No, they do
great work. Yeah. It's just there's bad apples sometimes. So I had this awesome tenant that lived in one of my rentals in Carter Lake, single family home, had a couple dogs. She was a great housekeeper, paid on time like clockwork, just, took care of annoying maintenance stuff herself. The house was always clean no matter what. Great tenant. She was a probation officer. Okay. So she had a case where this dude got released from prison for arson. Okay. And she was his probie. Is that how you say it? Is that what the cool kids say?
Pimp?
No.
Oh.
She was his probation officer.
Oh,
what are you talking about? She was his probation officer.
Why would you say probation
got
officer?
Got to know him. And then they ended up dating. And then I guess he proposed or whatever. And she called me and she's like, hey, and kudos to her for this, because she was like full disclosure, like, hey, I'm, engaged to this guy. I know how this is going to sound. He's coming out of, prison. He's on the straight and narrow now. He was in a bad relationship and stuff happened and he got convicted of arson. I'm like, okay. So I wanted to know if you would entertain him moving in. And I'm like, I got to be honest, this does not sound like a good idea. I don't know your situation. Obviously, you like him, this and that. I caved. He moved in. And
here's the horror story.
I got a panic call about 6 months later that she needed the locks changed immediately. And he was, like getting physical with her and threatening and this and that. And I'm like, oh my God, are you like, what are you doing? You know what I mean? And you just never know how people are going to treat a place. They can snap sometimes. You can screen and do whatever. Of course, I didn't screen. Well, I did. I knew what his deal was. I didn't have to do a background check. Arson.
Even if you said no, though.
Oh yeah, I see. Yeah,
they're just gonna. That's like, do you have a pet?
Yeah, exactly.
Well, I'll take the money for it instead of you just.
And
you're gonna bring him.
He's like, I'm gonna up the insurance on this in case it burns down.
Right. So anyway, point being, there's definite benefits. There's definite drawbacks to using subsidized housing programs.
Right.
But you still have to screen.
Yeah.
Right. You can't just rely on. They have a voucher. It must mean they're good. Right. I mean, that's the way this works.
A lot of times when we run credit, they have no credit.
Yeah.
Like all the time.
They're ghosts.
Yeah. That's what they just never had anything in their name. So I'm really looking at criminal and eviction on there.
What do you guys think about this? So, I own a property in Missouri, and I'm a member of this Facebook group run by Nathan Brooks called Bridge, REI or something like that. Big Kansas City Facebook group of investors, really active. He's a great dude.
Oh, this guy runs that group that you spoke
at. Yep. No, I haven't spoken there, but he runs the Kansas City one. You're probably thinking of a different guy. But anyway, great.
I talk about the trip we've been down to.
Yes, Augusta. I went to the Masters with him.
Okay.
Great dude. So anyway, his Facebook group that he runs is talking about these proposed legislation changes in Missouri and Kansas. And it's a laundry list of stuff. And guess what? All of it's anti-landlord, right? So it's rent control. It's a lot of stuff that we're battling in Nebraska as well as property owners. So part of that was no evictions. You cannot rule out somebody for having an eviction. Basically, you can't screen for evictions. What do you guys think about that? I don't understand the logic here. Like,
well, it's like you can't verify their income. Like what? Like there's so much bullshit stuff that's coming out right now. I mean, I don't envy you guys. I don't think I'll ever have another rental house. I'm gonna be honest with you. Like,
I mean, I think the search we do, it only goes back 5 years, anyways. So if the gripe is like, oh, what if I had an eviction 20 years ago? Well, we can't see it anyways.
Right.
So I don't know. Do you take people with evictions?
I don't.
Neither do I.
I don't.
Yeah, neither do we.
I screen.
But that's
them
only
out.
5 years. Like, I mean,
yes,
that's 5 years isn't that long ago.
Right. So here's the problem. Here's the problem with this legislation. It gets introduced quietly. So
it all does.
Unless we are actively looking for new legislation, we are never going to know about it or be able to respond. You could say, well, why don't you talk to your representative or your senator or whatever about that stuff? Like, I just don't.
Right.
I know that, and that's my fault. I own that. But the point is, like, it gets introduced so quietly with no logical response to, like, Senator, if you owned a rental property, would you want to know if somebody was not paying and got kicked out of the house and caused damages? Would you want to know that? And would you let someone move into your house? Or do you think this is a good idea? It's such a weird one-sided thing on this stuff that ends up having like bad consequences in the end. So it's like I don't know, the law of good intentions. It just never seems to work out that way. But
I mean, I don't know anybody that doesn't check for it.
Right.
I mean, that's evictions and income. I mean, those are going to be, credit matters, but if you can look back, it's like, oh, you have a 590 credit score, but it looks like you pay everything now. You make 5x of what the rent is. We're going to rent to you.
Well, and to that point too, like when you check credit, you can't just go off the credit score, right? Because if you look at the report, it tells a story. You can see like
it does.
I had cancer during, 2022 and I lost my job and I have medical collections. That's why my credit score is tanked. Okay, that makes sense to me. If you're just habitual about not paying for stuff, then that's a whole different story. So you got to kind of you got to go beyond the score itself into like the actual story.
Some people have bad credit and they always pay the rent.
Right. Like, but it's, if I can go in there and see that you miss your car payment 7 months in a row and then they took it back.
Oh, yeah.
But stuff like that, that's usually what it is.
Yeah.
On credit, that or like utilities is on there a lot.
Yeah.
That we see like Kaasch. So that's not like the end of the world. But car payments, credit cards. What's that? What do you got?
Ted's on day 3 without Wi-Fi at your Airbnb.
Oh my gosh, yeah. Nightmare
on a $2,000 booking.
Yeah.
Just go leave your phone there, put a hotspot on. There you go. Just it's worth it.
Yeah. Then Cox Cable shows up today, and they left to give him some space to do the work. Mm-hmm. Oh, I'm sorry, there's nobody here, so we can't walk in the door. I'm like, no, it's an Airbnb. Nobody said I had to be there. Yeah. I was hosting an event at the time, and I'm like, I can't leave.
Sounds like Black Hills.
Yeah, exactly.
Cox Cable.
Yeah. Oh, we got to do a pressure test.
Oh, God.
Stop. It's just. Sorry, inside story there, but we were talking about a utility company that basically, if you have a vacant house that's 90 days?
Yeah, 90.
If you have in Council Bluffs, Black Hills Energy, not a big fan. I will say that publicly.
Well, they're national too, right?
I believe so. Yeah, I'm sure they aren't just here, but they in our local area, they're a known utility provider that is difficult to work with. And if you have a house that you buy that's been vacant for more than 90 days, they require you to pressure test all of the gas lines, which always end up being an issue.
Which requires a permit, too.
And that opens up a whole, can of worms.
I think you can use HVAC, but they want it to be a plumber.
Yep. You got to have a licensed plumber do it's just a whole thing.
I got a client right now, and they reached out to me to list their house. Mm-hmm. And it was listed on very nice North Omaha house, right off like 40th and Ames area, 2.5-story granite, just pretty place, nice floors. But the pipes froze.
Yeah.
And it didn't cause, exuberant amount of damage. The floors look great still. It's easy fix. So 3-4 days will be done. But they went to put the claim in at the insurance company, and it's like, oh, well, it's been sitting on the market for rent for 3 months, so we can't cover it because it's
vacant.
Vacant for 90 days.
Yep.
And I see your cringe on your face. I thought that was shocking too. And so their insurance company won't cover the damages.
Did the pipes, when it burst, did it cause any damage anywhere, or was it just the pipes were frozen and they needed the pipes replaced?
All three bathrooms, pipes busted, and the kitchen pipes.
Because a lot of times what they'll do is they won't cover the pipe, but they'll cover the damage that it made.
Yeah.
And they're not covering any of that because there's significant drywall. All the drywall collapsed on 3 levels going down that spot.
Yeah. I had to fire a property management company about a year and a half ago, maybe 2 years ago, that I had a house, they were not good about communicating. I didn't even know the house was vacant. And it was in Carter Lake where I live. And turns out tenants moved out, shut the utilities off. The property management company did not have the landlord revert on, which is supposed to be their job as part of the contract. And then fast forward, the pipes burst. I really considered it. I was so pissed. And I was threatening legal action or whatever.
I'm sorry, but that's the difference between somebody who has money and doesn't have money. Yeah. If somebody has 5 properties and that happens, that ruins them, that's a lawsuit.
Yeah. The thing is, me sharing this about them has caused a lot more customers. You know what I mean? I'm just saying, you don't want a bad reputation about that kind of stuff because word gets around.
When they lost your business too.
Exactly.
Well, that's kind of like.
So what company was that?
I'll tell you offline.
But it's like when
I don't want to get sued.
When somebody does you dirty or something like that, a lot of people look it on Facebook and throw a fit or say that it's just, I'm just never going to use you again.
Yeah, exactly. Yeah. You lost a customer for life.
Yeah. I had that somebody a couple weeks ago, somebody asked me if I'd use somebody. I'm like, no, he was supposed to give me a bid one time, so I'm not going to use him. And the guy got my phone number and was super pissed at me saying that I was bad talk. I'm like, no, somebody asked me a question.
Yeah.
That's it. I didn't say with you or my insurance, somebody's going to get online and give you a crappy Google review. All I did was answer your question with somebody's question.
Yeah.
That was it. He's like, well, that's not very professional. I'm like, I didn't say anything bad about you. I'm just not going to use you. That's it, man. I don't even know what you look like.
So he said he was going to give you a bid and he never did.
Yeah. It's not that big of a deal though. I'm just not going to use you. No hard feelings. at all.
Yeah. It's like
But
I told them
he was,
what my experience with you was. Is you not want what do you expect?
He was mad, but I talked to him for a while. I'm like, I don't know, man. I just
Could have been
that's all I said.
Could have been a written review.
Yeah,
but it wasn't.
Well, I mean, I got plenty of them for insurance. I have one for like the insurance one company. Like if you Google us, it's like these guys suck. They never answer the phone. I had a claim and they would never get back to me. And it wasn't even us. It was the adjuster.
Oh,
you know what I mean? But it's like, but everybody, when they click on us, boom, they're going to see that right there.
Yeah. Okay. So this is going to be fun to talk about. And I'm curious because I haven't gotten a debrief from you in a little while. You recently bought, this was a pretty big property that you recently bought. You want to kind of give us the backstory here? Yeah.
For me, it was a really big deal because the biggest thing I had owned before that was an 8-plex.
Yep.
And so, this was a 60 unit that, I don't know, I would say that it's a very heavy lift, but your partners would have more of a say on that with what you've done. But for me, it's a lot, but it's a 60 unit.
The second property you've beat me out on. I'm just saying. Go ahead.
Pretty sure you wouldn't have paid what I paid. That's why I got it. So anyways, it's 60 units and it's in Twin City.
Twin Cities is where for listeners that don't
It's just a little pocket in Council Bluffs.
It's a part of town.
Yeah.
Subdivision.
I would say that it used to be the worst part of the best school district.
Yes.
But the area
is the entry point into Lewis Central School District. There.
Right. But the neighborhood's got a lot better. So it helps when hail comes through.
Yes.
And all the houses have been
all resided.
All new exteriors on them, except for this building.
Yeah,
but
sure.
I did find out that they were paid for hail multiple times.
Yes.
So it's 60 units. I did bring a partner in on it.
Who's your partner?
Andy Schock.
Oh, Andy.
So
we've had him on the podcast.
Most of my stuff, I didn't even say this, is me and my wife. Like all of it. And
partners. Yeah.
Well, I have an 8 and a 6 with 2 partners on it, but they didn't want to do this one, and so I went with Andy, and it was
Andy episode 220.
So it was just challenging. We had the financing set up, and the appraisal came back like $2 million less than it was supposed to be.
What?
So
how does that happen?
Okay, so they did an as completed appraisal. Okay, so we said, hey, this is what the rents are now, and this is what it's going to be.
Yeah. So 60 units. This is a rough building in a good hood.
Right.
Like this is where you want to be if you want to be in that school district.
Right.
There's 1, 2, and 3 bedroom apartments.
Correct.
Which is pretty unique for this area. There's not a whole lot of 3-bedroom apartment options.
No.
So it's a nice unit mix and a great location right next to an elementary school. Has a lot going for it.
The best elementary school.
Yeah. And so like, but if you look at it.
Because you went there or something?
No, it's Lewis Central. It's super weird. They put kindergarten and first grade at the school.
Yep.
Which is not close to most people in Lewis Central District.
No,
it's like
at
20,
all.
25 minutes.
Yeah. And I'm sorry, I'm filling in the gaps here, but the exterior is super rough. Like you look at it and you're like, geez. Because like old siding, like roofs are terrible. Yeah. Like the exterior is just not in good shape, and the interiors on a lot of the units are rough too. So just mismanaged in general.
Ran into the ground.
Yep,
ran into the ground. So the as completed appraisal. So we gave projected rents, and I thought they were pretty conservative. And on the as completed appraisal, they put rents in there lower than they currently were.
I didn't know this.
Oh, like no, that's why
bought that one.
That's why it bombed the appraisal.
Yeah.
Like, let's say they were getting 800 now, and we have it in there at 1,200 once it's renovated. They used like 600, so it just crushed it.
Yeah.
And so, long story short, financing at the last minute was challenging to say the least.
Yeah.
So you fought the appraisal, right?
No, I didn't have time.
So
it was right at the end. It was right at the end.
So the appraisal,
but $2 million is
yeah. So we didn't have to bring that all to the table, but we had to bring an extra. You would know.
It was like five, 6, something like that.
I think call
600,000.
Yeah, call it extra 500,000 to closing, which somebody here helped with. But anyways,
no, we
shout out to
I appreciate that. We didn't even have to talk about that, but like.
Well, anyways, though, so once we got into it, it was too good to be true at first. We'd get a unit renovated and be leased in 3 days. So we got like 8 or 9 of them done, and it's slowed a lot right now.
Leasing.
Yeah, leasing is slowed. So I think we've released 9 of them, and then we have 5 vacant right now, and then we'll have about 5 more to go once those are out.
Okay, so it's a heavy lift. I mean, have you done the exteriors already?
Those are done.
The exteriors are all done, so you got it looking pretty on the outside.
Correct.
How game changing is that when you get the exterior done? Is that just opening people's eyes to the property?
I mean, this was bad, man.
Yeah.
So I mean, it looks really, really nice, but I mean, there's still just more work to do on the property. It's all mud everywhere. We need green grass.
Yeah.
The parking lot's all beat up.
It's a crappy time of year to lease anyway in Nebraska.
Do you guys find that when you buy a large multifamily to do those cosmetic repairs on the outside landscaping is a smart first move, especially if you want to get some units rented right away? Because I'm assuming if it looks scary and sketch, I'm not going to be interested in even going inside of it.
Well, I mean, I'd say yes and no, because a fully renovated 2-bedroom apartment there for $1,200 is a really, really good price. So, but yeah, the outside, I mean, it's going to be more inviting, but I mean, I'd say yes and no. I mean, what do you think?
I can speak to that, actually current state, because the Missouri project I have is a real heavy lift as well. And the landscaping is something we didn't really budget much for. And there's a lot of rock that was, old, and there's weeds growing up out of it. No weed barrier, just looks like crap. Some of it's bare, and there were a bunch of volunteer trees, stuff like that. And so we did not have that allocated in the budget. And anytime you don't have something in a budget where you're pulling, where you have an architect and an AIA contract and like all that stuff, and you have a built, like the money's got to come from somewhere. And if you have not enough allocated for that, you got to figure it out.
Right.
And so we're struggling right now with the fact that we didn't have that in the budget and hadn't done it yet. And now there's like bare areas and rocks. And so people that are coming in that are potentially going to apply for this, they're seeing there's construction going on, but then like the landscaping doesn't look A+. They're like asking about it. So now we're dealing with that as well. So I definitely do think it affects it. And that's just the people that say something. What about the ones that go there and they look at it and they're like, this looks,
Yeah.
So I think curb appeal is extremely important when you have a new repositioned property, especially one that's been crappy for a long time. Forever. And then people come by and they're like, well, I see they put new siding and roof on, but like this still looks like crap. You know what I mean? I think you got to finish it to the point where it's like no questions that it's going to be a newly done, nice place that you don't have to worry about. So I think it's super important.
I'm not to your guys' level in the amount of properties you guys have done in the rental world, but every time I've taken a house and bought something condemned and renovated, the exterior has been my number one concern. Plus, I always wanted to appraise really high. So I always put some time into landscaping and the look of the outside, generally before I even start working on the inside, just so it didn't look like it's such an eyesore to the neighbors and whatnot. Right. So that's always been like a top priority to me. And I know if I was to buy something, assuming it was in my budget,
right.
If I was to buy a 6 unit, that probably would my mindset would go like, hey, I want to fix the outside, make it look pretty. And that way it's more inviting to keep those units rented, and helps it raise the rents also. So I mean, I think I would follow that path, and personally, it just seems like that would make a lot of sense.
Here's the tricky thing though about doing outside work is like you got to time it right, because if you do it too early, like if you dump all your money in before you start on the interiors, by the time you get the interiors done and you're leasing it, then the outside might look like crap again, because weeds start growing. Like you start a clock the minute you finish outside that is going to erode the effectiveness of whatever you just did. So it's a mulch, rock, whatever it is,
green grass.
Yeah, green grass. Yeah, so like you got to pay attention to the timing of it. Unfortunately, in the Midwest and the climate we're in, you're stymied with you can't put down new sod in January. It doesn't work that way. So you got
can't paint neither in that time.
Yeah, exactly.
Right? Yeah.
You got like 6 months that are decent conditions to get outside work done, and then you're kind of a coin toss on what you're dealing with.
I totally get the seasonal side of this.
I went golfing twice last week, and now we have 7 inches of snow on the ground today. So it's like you never know what you're going to get.
So my wife's retired father does all of our lawn and landscape stuff.
Oh, nice.
So like our Airbnb by Hillside, we definitely have the nicest yard in the neighborhood.
Yeah.
Yeah.
And so like with this, we can't do anything now. Like he just laid some pre-emergent right before it snowed, but I'm super confident that it'll have some green grass soon, because it is just a mud pile right now.
Yeah,
you know what I mean? So it's like when the snow melted, it's like,
yeah, gross.
But he'll be over there every day. I know that. But the other thing that we ran into, so it was bank owned for 6 months.
Yeah, it went in. So the former owner was basically in foreclosure, and the bank put it in receivership. So they had basically a person that was designated to get units leased, do necessary repairs, just kind of keep it steady state, lease it up if they can. Yeah, but that's what happens. The backstory was the owner got into financial problems with other businesses, it bled into that. He was taking hail claims on the property and not doing any of the work. So he's basically taking money out of sucking everything he could out of that property, not putting any money back.
Well, who knows what was going on in his personal life, you know?
Sure. Yeah.
I don't know him. You might.
Yeah, I don't. I know of him and I know a lot about the situation, but so that's how I came into the deal originally. Like it was off market at the time, and then they ended up listing it, and we offered a lot less, and we thought we thought we were going to get it. Like we thought we were going to get it for like 2.4, which
that'd be a pretty good deal.
Yeah, it ended up being like you got it for like $50,000 a door, right? Is that
it was 4-1.
4-1. Yeah. Okay, yeah. So okay, all right. My math was wrong. I was thinking 80 units in my head, but
I think it was 70.
Yeah,
I don't.
So anyway, you got a good deal. Regardless, we were in a lot lower, and then after they came back and they said no, we want. And they count. We just kind of did the back and forth. Finally, we're like, we're out. And then you stepped in and took it down. And so okay, this is a really. I mean, this was a pretty big move. I mean, this is a big project, especially just like with one partner.
For me, it is a big deal.
Yeah. And so, like, how do you feel now that you've kind of gotten into it, the dust has settled? Are you happy? Is it going as expected? I know you've had some vacancy issues vacant.
But I have vacancy issues on everything right now. Anything that's coming for rent right now is really tough. I think in a month we'll be in a better spot. But I mean, besides, I feel like we're almost done.
Yeah.
The construction note is 12 months. Yeah, I would like my money back. Right. That's into the deal. But at the same time, it's like it's interest only right now. Mm-hmm. Why refi it when you don't need to? Because I like my money back. So it's like, it's kind of what's the right answer there?
Dane, let me ask you this. So you got the appraisal back. It was obviously a really crappy appraisal. And it's ridiculous to me that somebody can, because this was like a week ahead of time before closing.
Like 4 days.
Yeah, it was super tight time frame. You got it back and they're like, oh yeah, hey, go ahead and bring $500,000. Yeah. To the closing, more on top of what you're already putting down, which is a substantial amount.
Right.
Like, it's just like, are you serious? Like, could you imagine sitting that banker down that was having that conversation with you and saying, hey man, 4 days come up with $500,000, like that you weren't planning? Like, that's ridiculous to even like ask someone.
And the banker on the deal, he's like super nice and timid guy. Like just, he was just so scared to tell us.
Oh God. Yeah.
You know what I mean? And especially someone, I mean,
no, you're a teddy bear.
Yeah.
Dane is a hard negotiator with that kind of stuff. So, but
he's a good lender. I get it. But
so here's a question. I don't know if he listens to this podcast, but you're on notice if you do. Do you think you're going to stick with that bank when it comes to refi?
Ooh, great question.
I know that's a ways off.
Probably. So
I had this happen to me on a house. So, and they screwed me at the table. Like the day I went to sign papers, my check wasn't the check I was promised, and I will not use them again, even though they're a great bank and they do great things.
Well, it goes back to what we said earlier. I mean, if somebody does something, you can throw a fit or just not use them again.
Yeah.
Like I know they're investor friendly, they're a good bank, and they've done people right, but that pissed me off.
So I would say probably. So the big thing, if I do the permanent financing with them, there won't be another origination fee. So let's just say it's a $5.5 million loan. Origination fee on that is
$55,000, or they charge you a point.
Or half. Does it even matter? That's so much money.
It is.
So that's great. You know what I mean? But at the same time, 30-year HUD financing would be pretty nice as well.
Yeah.
Maybe they're not your first call. Maybe you're going to call a couple people first. They're still on your list, but they're not number one anymore because they screwed you.
Yeah, but they didn't have any. They don't have any impact on the appraisal, but at the same time,
well, that banker has enough that he can at least say, "Hey, your rents are wrong."
Well, it was an as completed, so they didn't go off any actuals though.
That's so dumb.
It is.
It's almost laughable.
I should have just got an as is complete.
How long ago was this?
As is appraisal. It would have been more.
How long ago was this now? This appraisal?
Like 4 or 5 months.
5 months. Probably.
Can you still go back on it and have?
No.
Well, I'm going to get a new one anyways, though. Once it's stabilized.
It's that ship sailed.
Okay.
Yeah.
I don't even know the name of the company. I probably should.
Yeah. So generally when I've done something similar like that, I'll get an as is, as completed, and as stabilized, and it's all in one, and you have to pay more for that, but they'll basically work through the numbers and the pro forma on it and then arrive at a thing. But it's neither here nor there. But one thing that sticks out to me in this conversation is I have almost the exact same approach as you do when somebody screws me over or I have a really bad experience. I'm a quiet quitter. Like I just won't use you and you're going to lose my business. But also if anybody ever asks, I'm going to give you my real feedback on it. So it's a exponential effect, but I approach it the same way. And this is why, owning a lending business too, we have a lot of people that'll be like, yeah, to your point, Ted, at the closing table, they were given a term sheet or maybe they just told them like, here's what the terms are. And then all of a sudden they do a bait and switch and say, well, yeah, but actually it's going to be, 2% more than what we told you. And we've had this happen so many times.
Like right before too.
Right
where
before closing. You can't do anything about it. You're screwed. And they've got you. But we've gotten customers over and over and over again where they did not do what they said they were going to do. And that is like, you just be straight up with people, even if it's a bad news situation. Like, you generally are going to get people that'll work with you, right? But if you're pulling fast ones on people just to try and make an extra buck, a quick buck on it, it's so short-sighted to do that.
Well, then we ran into like the prior management owed contractors money.
Yeah.
Like, they were texting me like, hey, we're going to put a lien on it. The guy was a nice guy, but I was like, here's their number. I'll make a phone call for you. But I would have been pissed too. If you do work for somebody and they don't pay you.
I know one of the guys.
Yeah, but
it's plumbing company.
Yeah.
Yeah.
He's a nice guy. I tried to help him as much as I could. I think he got paid.
Yeah.
But I'm like, I don't have anything to do with this.
Yeah.
I got enough bills with this stuff.
Yeah.
Because like we ran into it too. It's like, they turned a bunch of units, but we redid them.
Yeah. They were crap. It was just, lipstick on a pig type thing.
Yeah. But spend a little bit more money, but like at the same time, we kind of went through before, like we're using the same flooring, same color, same lights, everything, we're buying it in bulk. Mm-hmm. And so I have these 2 units to show. One looks like this. One is all of our stuff.
Yep.
Every single time they're picking this one. So it's like, do we turn it again?
Yeah.
You know what I mean? Or at least change the paint color? Or do we just wait till all of those are gone? Just be like, here you go.
Hey, on the buying in bulk topic, so when you buy a big project like this that is going to have a bunch of unit turns and you're going to need a whole bunch of materials, can you talk about what your approach is to that? Like, how do you go about lining that up? Like, what's the process? So
Andy's pretty good at this too. So Amazon's great for like lights, hardware for cabinets, little stuff like that.
Yep.
But the 2 biggest costs are going to be appliances and flooring.
Yep.
So I know some people have gone straight to distributor for flooring. I'm really happy with Floor & Decor. Mm-hmm. I buy a ton there. I feel like they give me a really, really good deal too. Yeah,
I think you sent me a SKU or whatever about the LVP you found. Yeah. That's really good price.
I've used their clearance tile on every bathroom model I've done.
Oh, no kidding.
So we can't
in my own house
because we got to, I want to buy the same stuff. So it can't be something that's going to be discontinued or whatnot.
That is the bane of my existence.
So we're Floor & Decor, and then appliances. You can go to Nebraska Furniture Mart and you say, hey, I'm going to buy 20 or 30 sets of these. What can you do for me?
Yep.
I just hooked up Dan Zimmerman on his big project. He needed like 30 or 40 sets for his project he's doing right now, and sent him to Home Depot and used his REIA discount. Oh. And he's like, I can't even tell you how appreciative I am.
No kidding.
Of how great of a deal I got.
That's awesome.
Home Depot will play ball. Mm-hmm. So I showed him because I wanted, like, I can't remember what it was, but they wanted, it was when Menards stopped doing their rebates. And so they're like, one of my guys that does all my projects, he's like, well, they want to meet with you, see what it is. And they're like, well, we can do these prices. And I'm like, I didn't even look at them. Like, I just know they're not good. And then whatever. I just wanted to see if they'd go down. But then they're like, we need numbers. So I gave them my Menards stuff. Then I'm like, hey, I'm getting 11% off this because the rebate, and then 2% with the credit card. And so they made everything 15% lower than Menards.
Whoa.
But it has to be at that location.
Yeah.
But they do free delivery.
Yeah, so
Lowe's plays too.
That's
they do.
Yeah,
Lowe's is the biggest.
Yeah, we talked about that.
We were talking about this yesterday, but none of my guys like going to Lowe's.
I know, that's weird.
They hate it. They're like, I'm not going.
It's so funny how contractors will get aligned. They're just like dead, steadfast customers of Menards or Home Depot or Lowe's, and like rarely do they mix. So it's so funny to me.
You know what? The one thing I did notice when you do go to Lowe's, every person that works there knows where the hell everything is.
Yeah.
Oh, because they can do it. They can do everything.
No, like they like grill them, all their employees when they hire them, of knowing exactly where everything is.
Yeah,
like they know their shit. And I know they're not sponsored National REIA or REIA or this and this, but the Lowe's employees are on their game. The Home Depot employees are.
Just got to go to the pro. Just go see Judy at the
pro desk. Is amazing at both locations, but the staff and the questionable.
I 100% agree with what you just said. Like you could go in there with a machine gun and unload a magazine there and not hit an employee. Like that's what it seems like. Anytime you need help, it's like, does anyone work here?
But Lowe's, it's like literally, it's all like veterans working there, and they know their shit, and there's a lot of pride there. And it is. That's the only reason I keep on going back there, because I have a Home Depot and Lowe's in the exact same distance from my house. I can walk either of them.
Yeah.
But it's the knowledge that I get in the aisles. I mean, that help.
Like 10 years ago, I was at a Lowe's, and there was a guy with a red vest standing right next to a cash register, and I'm like, "Hey, sir, can you tell me where this is?" He's like, "I don't work here," and he was just mortified, and he walked out. And it's just like, anytime I go into a Lowe's, I just think about this poor guy. He just left.
You're like, lose the red vest, bro.
No, he was right next to a cash register too. It was so funny. I actually just felt really, really bad.
That's great. Oh man. Okay, so you mentioned you're kind of like midway through this project. Do you have a whole bunch more unit turns but they're occupied? So are you like kind of like, you know what I mean, allocating future planning and resources to doing unit remodels, or like how's that looking for you?
I mean, yes, but I would like to do as many as I can right now.
Sure. Rip the Band-Aid off.
Yeah, let's do as many as we can. So, once we get the ones done that were already vacant or had problems, like there was one that the electric's been off there for 6 years. Nobody knows why. So it's just been vacant.
In a unit?
Yeah.
Oh, yeah.
6 years.
Yeah.
Why? So my electrician called Mid-America, pulled a permit. They're like, yeah, I have nothing. I have no idea.
Wow.
We have nothing. So going through that process, like we should have it on by like next week.
Were they using it for storage?
No, that was a different one. They had 2 units used for storage.
Okay.
Great.
Yeah, great use of just pile your crap in there.
I can't wait
$2,400 a month.
I can't wait to find out like what the reason is for this. Watch it be something real stupid.
Here, okay. One thing I do want to ask about is heating and air. So HVACs you talked about flooring and appliances are generally your 2 biggest ticket items when you're doing interior remodels. Mm-hmm. What was the HVAC situation there? Because that is a huge cost a lot of times. Roofs, HVACs,
right?
Those kind of things.
So I use the same guy always for that, and we ordered 20 of them.
Okay, you want to give them a shout out?
Chops.
Oh, I love this guy already.
There you go. So we've done 20 of them. So it was going well, doing most of them, but the prior owner had the exterior lights turned off because he didn't want to pay the bill. So going back to kind of what we did before, once lights have been off for X amount of time, you have to get Mid-America Energy out there, then have an electrician pull a permit. So one of the buildings you couldn't really see back there, and somebody stole all 8 ACs.
No.
But the good news is they're already old, but still, it sucks.
Yeah.
But I didn't even know about the lights.
Is that an insurance claim?
Don't make insurance claims unless you absolutely have to.
Oh, okay. From the insurance guy. So
I mean, you're just going to pay it back more. Hail's good. Claim hail all day long. Broken pipes, theft, those will crush you.
Interesting. Okay.
And
water and theft. Those are.
Storm has pretty much been the only thing I've ever claimed.
Yeah, you're good. You're good. I definitely claim them.
Yeah.
Okay. Well, man, what an adventure this story is. I've learned a lot about you today, actually.
Well, Dane, before we get wrapped up in the next section here, like, what does your portfolio look like today, and where are you looking to grow in?
I get asked a lot, or people, when you go to networking events, stuff like that. It's like, well, what's your goal? Where do you want to go to?
How many doors do you have?
How many do you want? It's kind of just, it's really hard because it is a buyer's market right now. If you are an investor, you know what I mean, in this field, if you're not buying right now, I mean, it's gonna get a lot tougher. So my answer to that is, as long as prices stay like this, I'm gonna keep buying
as much as you can. Anywhere?
Not anywhere, but counts plus Omaha.
Yeah.
So I think we're about 220 doors right now. And then
in 4 years, that's stout.
That's crazy.
So 60 of that's with Andy, and then I have a partner with the same partners on an 8 and a 6. Mm-hmm. And then the rest is all with my wife. So
all starting for the HELOC.
Well, no, remember I spent all
starting with an $80,000 down payment on the Bennington place.
25% down. Yeah, it was like 10 years of savings.
Oh, this is great.
So
are you starting to like bundle these up together and then refinance them to keep growing, or are you just?
Oh, we refinance them. I mean, we try to.
Do you package them up?
No. I mean, when we purchase a property, I'd like to be in and out, done, and refinanced in 3 weeks. That's kind of our goal.
How many properties are you putting in each LLC?
That's a bad one right there. I would be the example of what not to do. But that is something that we're working on. So
you're going through some growing pains right now, huh? That's what happens when you grow this fast.
Yeah, no, I mean, it was my own fault. Like I started a new LLC like 6 months ago and we haven't used it one time. So first time today, we got something under contract and I gave the LLC and she's like, is that a new one? I'm like, kinda. I just haven't put anything underneath there yet. And all I did was so it's DRL and that's my first 3 kids' initials and I had a 4th kid. So we put a K in front of it. And that's it. But yeah, she's going to be pretty left out for a while here.
Oh,
but no, funny. I think I told you I sat down with that company, Accruity, and it's kind of, I don't know what I'm going to do, but it's basically bookkeeping, accounting, in-house counsel, all for real estate investors. It's a monthly price, which is kind of nice because I feel like with accounting,
it's easier to budget.
Yeah, well, it's accounting. It's like you have X amount of LLCs and businesses. It's like whack, whack, whack.
Yes.
You know what I mean?
Yeah. Here's your bill for $16,000.
Well, I don't even know what they are.
Yeah,
because you get so many of them. It's like because it's bookkeeping, it's quarterlies, it's this. It's I'm like I don't know, and I've had my stuff with them for
Yeah. What I like about your story, though, Dane, is you really have stepped on the gas. I mean, 220 units in 4 years is, I mean, you got to take a breath for a second, look and stick your head up and say, we've done some good stuff. I mean, you have worked your ass off to build that portfolio. So want to acknowledge that, but also like what I really like about you is that you're figuring it out along the way. You didn't sit back and say, you're like kind of ready, fire, aim type situation. I don't know if that's a good description, but you have figured out a lot of stuff and you come almost every week to the meetup to learn and exchange ideas and referrals. And it's just, I don't know, man. I've just really gotten to enjoy kind of finding out more about you and your story. And I like the fact that you're so open to, networking and learning and contact exchanging.
Before I started and when I did start, I had a lot of people around me like, oh, people that go to those things are dorks. Listen to these people, blah, blah, blah.
And he's the cool wrestler.
No. What it was, though, is like anybody that does that, what a D-bag. You know what I mean? It's just like, and then so I didn't.
That makes us the biggest D-bag.
No. But now I go all the time and I'm just like, dude, I would never miss. Like, you know what I mean? Like, how do you get any better at anything? Sitting with your one buddy.
Yeah.
Yucking it up, making fun of people. It's like
we learn from other people's mistakes
and my own.
Yeah.
And I want to tell, and I got no problem talking about them.
Yeah.
But that was kind of like the first, like a lot of the people that I knew though, from the beginning, it was just like, they don't want to give referrals. They don't want to do that. And it was just like, well, I got to figure it out.
Yeah.
And I'm going to.
I love that.
So when you started that though, that changed a lot. So, I mean, a lot of those guys are my really good friends.
Yeah.
Or girls, but, those are the people like, I have a stupid question. That's who. What do you do here? What do you do here?
Is that where you met Andy?
Yeah, and I mean, but like Clint, Nate, Andrea, Jasmine.
Well, I mean, I was referring to your business, being your business partner.
And I'm sure there's been other. Well, your group and your group. I'm sure there's a lot of partnerships that have come from all of those.
I mean,
selfishly, Ted and I, we love that.
Like, well, that's what it should be.
That's the whole goal.
Yeah, it's a cool part.
Well, I mean, that's just what you know about too, though.
Yeah. Exactly. Yeah. So, okay. Well, we've got the next section that we wanted to talk about is called
Failing Forward,
where we talk about, you've talked about a lot of stuff that you've had challenges with, but do you have anything in particular that maybe lessons you learned, something you do differently, but you're glad you went through the process that was a fail in business or life?
Any success that I have is going to be based off failures, but I mean, going way back, but I had my first house. And I was selling it and I was going to keep it as a rental. And I had a close family member tell me that if you couldn't fix things, you shouldn't manage your own property or have a rental. And I owed like nothing on this house and I sold it. When you go back and look at how much money you could have had and how easy it is to figure it out or pay somebody, that's probably one of the reasons why I scaled so fast is because I kind of have that in the back of my mind. It was just, to say it was terrible advice is an understatement, which kind of just goes to, we've talked about this before, is just, be careful who you take advice from. You know what I mean? Just because they're your good friend or your family member or whoever they are, doesn't mean you should take advice from them.
Yeah.
Even the best qualified person, you still need to look at it.
Right.
Does this, is this how I want to run my business? You got to look at yourself.
Hey, that, you mentioning that you owed nothing on it, sold it. We didn't ask this during this, but do you sell anything? Like, do you flip? Do you?
A little bit.
Yeah.
I should do more.
Okay.
But
so it's the nice
like
little kicks of income that you get or cash coming in. Like that's nice to have too, right? I didn't know if you were I'm going to own everything I have
keep it forever, never sell.
Yeah.
No, I mean, especially like having good relationships with agents that'll bring you deals. Like, hey, I'll list it with you. Bring me anything you have. And a lot of people will like that.
Yeah.
But
I think if you advertise that hits home because there's a lot of people in the real estate world that has their main agent. They'll take leads from anybody, but then they have their main agent they list with. But when you put it out there, I think it stands out to those investor agents. As an investor agent, it stands out a lot when you say that. So like you got to really make it known that you're willing to do that. One guy that's really good at that is Hal Richmond.
Oh.
Yeah.
And then on top of that, he'll like once he sells it, he'll put a post out there, a little video, and then he'll tag that agent on it that they found him the lead and they sold it for him, and then
Free advertising for the agent.
Yeah. So
It's a great idea.
because your lead source is agents that are in those networking groups.
Right. So if an agent brings you a deal and you're going to keep it as a rental, I mean, they might make a little on the front side, but I mean, when they get to list it, I mean, that's it.
Yeah. No, that's a great tip. So like when you're flipping and you use an agent and you give them the backside of that too, they're getting 2 closings for one. So, it's a great hook to get lead gen for you.
But there's another win in that because I'm not going to name drop. I did this recently for somebody. I found them a deal. They flipped it and they put it back up. And then it came time to where we had it sold. And I was willing to negotiate on my commissions more because I just got paid on it.
Right.
And so I was willing to work on them more because I felt like it's me giving back to them too. So I took a 1% hit on my commissions to make sure that the deal was more profitable for them because I want to do more deals with them.
You listed at 2%.
Yeah. Oh, I know.
I'm just kidding.
No. We put it. It was originally up for.
No, I'm just kidding.
I took a percentage off my commissions in
Right.
the end because in the end I was looking at it and they weren't making a ton of money on it. And I want to make sure, and I want to make sure they did right. And I already got paid on it in my mind, so I was willing to work with them more.
I should sell more. Yeah. Speaking of selling, though, like we've done a couple wraps. I'd like to do more.
Oh, okay. I do want to talk about this because yesterday you brought this up during the coffee meetup. What is a wrap, first of all?
A wrap would be Owen has a loan for 5% for $100,000, and then what you would do is you'd sell the property to someone for more than what you would
So
owe.
I own a property. I owe $100,000 on it. I have a 5% note. You come along as a buyer. You're going to move into the house. I sell it to you for $150,000. Let's say.
Right.
How does it work?
Okay. So the majority of people that I know that do this will sell it at like 10%.
Okay.
Which, in my opinion, is very predatory.
10% interest that they're financing it at. Okay.
Right. And so we'll put a point on it. So if I have it at 5, I'd sell it to you for 6.
Okay.
At the flip price, though.
Yep.
At the new value, but you don't want to do it in the first year, though, because now you got short-term gains. So basically, you rent it to somebody, they lease it for 1 to 2 years. That's a great time.
Mm-hmm.
So you're going to sell it to them. I'd say, you can go whatever you want on there, but there's rules and regulations on here, because you can really take advantage of people.
This falls in the Dodd-Frank Act legislation where they cap usury. There's usury laws. Basically, that means how much interest you can charge an individual.
Right. But so most people that do these, though, are charging
a lot more than they should.
You don't need to.
Yeah. Are you doing a mortgage? Like, are you doing a mortgage and a deed of trust, or are you doing a land contract?
So Nebraska. This is from my attorney.
Okay. Yep.
Not me. So Nebraska, deed of trust, Iowa, land contract.
Yep. Okay. And did you recently start doing this, or is this something you've done a few times?
Well, I'm super experienced. I've done 2. So I basically know everything about it. No, it's one of these things. I know people that do them, and you kind of, like anything, you go down a rabbit hole, you get interested in it. But so what you can do with it, though, is you have a third party manage it. So it's called a servicing company. So what you'll do is you'll put your buyer on a 30-year note, 20-year note, whatever they want. Mm-hmm. And they'll also go escrow. They pay the taxes, they pay the insurance. You're completely removed from the situation.
What is the benefit of doing that versus just an outright sale?
I'm making 1% interest or 2% interest or whatever you sell the note
whatever
as.
The spread is.
Well, you're getting your flip price.
Mm-hmm.
Okay. And the taxes are going to be spread out. And you're making the interest, whatever the interest is on there.
So you're creating money basically out of thin air. And you're not having to pay a big tax hit on the sale,
right.
Especially a short-term gain,
right.
Which is ordinary income. No, it's great. In fact, while you were talking about this, I have two properties where tenants keep asking me if I have, like, would you sell this? Would you blah, blah, blah. And they don't have enough to get traditional financing. And until you brought that up, I hadn't really even considered doing a wrap on it, but this is perfect for that type of situation. So
especially if you have a good interest rate on it.
Yeah.
But like that Bennington property that I have, my super cool one, I have a 3% interest rate on that.
Yeah.
And that house, if you ever listed it, would be.
So you're just pounding away at principal, right? So like the whole time, like you put 25% down, and you're just chunking down the
no,
equity.
That one, no, because it's a 30-year note.
Oh, okay.
I went through like traditional financing, everything. I didn't have a clue.
Well, that is that's a great lesson. I love all the stuff that you shared about this, because like this is stuff that you are going to encounter you've grown at such a quick pace that there are bound to be problems along the way that you have to fix. Like, so it's jumping out of the airplane, building the parachute on the way down almost. And it's cool that you've got the grit and the determination. Do you think your athletic background and your competitiveness comes into play a lot with real estate investing?
I think me not accomplishing any goal that I ever set from an athletic standpoint definitely has something
you got a
to
little
do with
pent up accomplishments.
Oh, not even close.
He
to
just flexes the muscles and he's like, give me what I want.
Definitely. Especially, because I'm at a point right now where a lot of kids that I coached through high school, they're graduating college now.
Oh.
You know what I mean? They're doing their own stuff, and it's.
Are you coaching them on buying real estate?
I mean, they should. I mean, if I could go back,
you just sell them a lifetime package. I will be a wrestling coach in high school, and then it's life coach or your 20s coach. Yeah, it's a tiered package.
You can use this video. You can use this video to get your YouTube channel going.
Nobody wants to watch that. No, well, you just tell them it's like, what should I do for my first one? I don't know. Buy 2, 3, or 4-plex, live in it for a year.
House hack.
Right.
Yeah. Oh, I love it, man. So many good lessons here. We have 5 lessons that we're about to teach you with these questions in the OT with Owen and Ted. See what we did there? Tied it together.
I don't think I ever heard you say 5 questions before.
I know. I was panicking because I thought it was 6. But okay, if you were going to write a book, Dane, what would the title be and or topic?
This would be something I would not do.
Well, you could just talk.
I know,
like
but
Ted does.
if I did, it would be on some sort of failure or some sort of accomplishment that you didn't meet, and then how you responded to it.
Maybe coaching wrestling.
Sure.
Okay, so failures and how to overcome them.
Mm-hmm.
Yeah, lessons learned.
What do you do next?
All right, I love it. Okay, Tedders.
Yeah, it's your podcast. You can interview anyone in the world today that is alive. And it doesn't have to be real estate related. Who is it? And if you could get one question answered, what would you ask?
We already did this.
So it makes it easier.
I would say Tim Grover, just because of the people that he's been around. He was Tim Grover. He
Relentless.
But he was, Kobe Bryant, Michael Jordan, Tom Brady, mental coach for all of them. And I would just say, what intangibles would do all these people share?
Yeah.
So.
Oh, that's good. That's good. I mean, most people kind of like Ted asked this question, and I always we debate behind the scenes about this, but like he'll be like, "This is his question he came up with." Yeah. Who's your? Which I love. If it was your podcast, you could interview anyone alive. Who would it be? And then he's like, "What's the one question you would ask?" Because I don't like 2-parters because it doesn't. People guess brain doesn't work that way. A lot of times they're struggling to come up with the first one, and then there's 2 of them, and then it's short circuit. But you're one of the few that have rattled off unprompted both. So good job.
Well, I created the question originally because I wanted ideas of people to interview on the podcast.
Oh, maybe he'd show up, but I don't know. That'd probably be pretty expensive.
Good job to Tim. Let me know if he'll come on.
Yeah. We will welcome that. All right. So we're at the end of the road for Dane Peterson. It's your funeral. Based on what you know now or what you think the future is going to look like, who do you think will be the one that will walk up and deliver the great goodbye?
Would definitely have to be my wife.
Okay.
So I know it's kind of cliche, but
what do you think or hope she would say about you?
Wasn't afraid to take risk, had a desire to be successful and accomplish things, and was a good father.
Perfect. All right.
If you had to think about your life in whole and think about the mentor that had the biggest impact on you, if you could speak to them directly, who is it and what would you say?
So that one, I don't really have one, but I've had a lot of people really, really help me.
I was for sure that you would come up with like an old coach or something.
No, and honestly, like the people that I ask like the most advice for is like kids that I like. There's 2 kids that I coached, and I'm like really good friends with their dads, and they're super successful, and not really real estate guys, but like that's who I ask shit to all the time.
Yeah,
which is really weird.
No, I
all have our
no. It's just guys that I really respect and will always shoot me straight.
I mean, if I asked this question 5 years ago, I have the people in my mind. If I asked it today, I probably ask Owen more questions than I do anybody else at this point. So
I think you got to have that.
Little does he know, I just asked ChatGPT whenever he asked me a question. So
coming from the guy that used to give me so much shit about using ChatGPT.
Oh, I love it.
Okay, Dane, I know you're not a huge social media guy, right?
I mean, I have it.
But okay, based on where you are and where you want to go, are you looking for anything in your business right now or life that somebody catching this episode might be able to connect the dots with? More deals, more something, another contractor, like anything?
Yeah, I mean, always looking for deals, always looking for contractors. But like at this point, the main thing that I'm always looking to is just to connect with other investors.
Okay.
Just to see what they're doing, what's working, what's not working. I mean, that's everything. And I don't care if you have 5 doors or 5,000. It doesn't matter. There's things that you're crushing at, and then there's things that you're getting beat up on.
Yeah, you should do what Owen did with the coffee event.
No, I like that.
No. Like, tell him what you did with the coffee meetings.
104 coffees.
Yeah, that's exactly what he's talking about almost.
Yeah, I mean, that was awesome and a lot of work and whatever. But so I did this experiment in 2021 called 104 coffees. I didn't label it at the time. This is something I came up with post-mortem. But I created a Calendly link on Tuesdays and Thursdays. I would be at the same coffee shop at 9 a.m. for an hour and a half. And I said, anyone that is interested in real estate investing or is actively a real estate investor and has, my prerequisite was that, or you want to get into it and you have a positive attitude and goals, I will meet with you one-on-one. And so this sounds crazy and stupid and like egotistical, but it's not at all. Like I just put it out on on a couple of Facebook groups.
That was a smart thing for you to do.
And then like literally, I don't think I'm exaggerating here. That day, it probably took, I don't know, less than 8 hours. My whole year filled up.
Did you have the podcast at the time?
I think
22?
we just started it.
Yeah, you just started. Yeah,
or maybe it was right. I don't even know if it was the podcast was a thing then, but this was before that. I was just a lot more active on social media, and I really wanted to just connect and meet with people, and it was life changing. Like partnerships, deals, like friends. People I've gotten to be really, really good friends with. It's amazing. It's so much work to do that commitment, but like it was so impactful for me. And like I don't know. It was cool.
Coming from the guy that can't like plan out like a month ahead, and that's a lot for him.
Just one day at a time.
Yeah, one day at a time.
Look at my calendar for tomorrow.
Yep. But hey, give me some credit about the coffee meetup thing. This has been a year and a half. Every week, I've missed maybe 5, 6.
You in essence replaced what you did with that event with this event.
Yeah.
Well, I bet we have 10 people that show up every week.
The core group. Like,
that was super fun. We did the Friendsgiving though too.
Yeah,
like,
that was so
awesome.
fun.
I don't. So my wife hadn't met anybody.
Yeah.
Before then,
she's like, who are these weird people?
No, she's like, this was awesome.
I met your wife once here.
Yeah, but then was that before? Or after?
That was before, I believe.
Yeah,
I had no idea who she was.
So anyway,
I thought you were just flirting with somebody in the corner. I didn't know.
But okay, so deals and connections. That's basically the gist of it. Other investors that are making moves and motivated. Yeah, love it. Okay, so reach out to Dane. Are you on socials? Any one more than the other? Facebook,
all of them.
Instagram,
Facebook's probably
okay.
I'm 40, so I mean that's kind of our
the
main one.
Yeah, that's the Facebook crowd right there. 40 to.
When do you turn 40? You're not 40.
March.
Yet. Okay, March what?
13th.
Oh man,
all right, birthday! Happy birthday! All right, well this has been amazing. Any parting words, or should we go for the Friday send off here?
No, I just appreciate both you guys and.
You and my grandma have the same birthdays.
Aww.
That's awesome.
So she'll be 89.
What's crazy is me and my great grandma had the same birthday.
Oh yeah,
and she was super old, and she never remembered my brother's birthdays. Definitely remembered mine, and I got money all the time.
Nice. Was it $10?
Oh, like one or two, probably. That was a long time ago.
When I was my grandma's house became my Airbnb that I have now. Anyway, long story short, if you listen to podcasts, you know. But as we were clearing the house out, I kept finding these envelopes everywhere, and like an envelope would have my name on it, an envelope would have my kids' names on it, like each one. And there was things that she hid around the house at some point in her life, and put like precious stones or like collector coins in, and she was like intending them to be found.
Oh, like an Easter egg hunt kind of.
She was pretending them to be found when she died.
Oh, really?
And so I took them all and I put them in my safe.
Yeah,
and to make sure that they went to the right person when the time came.
If I could, quick story here. So my wife's family from small town Iowa also, and So I've told this story before, but not this one specifically. But my family, on the Dashner family, is like dying off like we're on the Oregon Trail. Like it's me and my sister and my parents basically, and there's extended family and whatever, but like all my direct relatives, like there's not much. My wife's family is multiplying like gremlins and thrown in a bathtub. Like we started at her grandma's house. There's a 2-bed 1-bath kind of raised ranch, so you're probably 900 square feet tops. And every Christmas we would go there, and she had this thing where she would call it cold cash, and she would keep $100 bills in the freezer. So it was literally cold, right? And she'd give them to everybody in the family. So everybody that came to Christmas got $100 from Grandma Gladys. And over time, the family started getting so big that there were like 50 people. Maybe I'm exaggerating. There's at least 30 for sure that were crammed into the living room and kitchen of this tiny 2-bed, 1-bath
Never
house.
want to miss that Christmas, did
Right,
they?
right. But it was like she couldn't. You know what I mean? It was like $5,000 or whatever, or $500 at a time. Or no, that's not right. Yeah, $3,000, $5,000 every Christmas, and she finally had to like cap it or whatever.
Cut it off.
Cold cash. Yeah,
Cold
that
cash.
was always her thing.
I'll take some cold cash.
I know. I love cold cash.
That's good stuff. Dude, thank you so much for coming on. I know we've tried to make this happen a couple times, so I'm glad that we finally made this all come together. I know that you kind of stay pretty quiet in the background, but you're making a big presence at the events. And I love that you're starting to come to the REIA events too, and you're branching out. And I think that there's a lot of people that don't really know all of the shit that you're doing. And I think this is going to open people's eyes up, because you say you're very conservative and you don't brag about anything. Like, you're like, hey, did I do this? And I want to buy some, you don't. I mean, it's just, maybe it's my perspective, but I don't see that. And I got a lot of respect for that. But keep doing what you're doing. You're kicking ass. And I can't wait to see where you are in another 5 years. I mean, if you're growing this fast in 4, you're going to probably be triple that in the next 5. So keep it up, man. I can't wait to have you back on when you hit those next goals.
What I see, Dane, like, you don't even have to keep this pace. I mean, if you're in this game another 5 years, you're set for life. Like, you will be able to retire if you wanted to, but I don't think you will. You get bored and find something else and scratch the itch or whatever. But like, trust me, man, like, I got 12 years on you. Like, it's happening. I'm really excited for you, because you feel like, or based on what you said, it feels kind of like your self-perception is that you started late or later than you should have. But dude, you made up for it in spades in the short amount of time. So love you, man. Like, thank you so much for coming on. This has been great.
And it's awesome how you include your wife in all this too, and how that's all come together too. I'm be excited to see this be a family business for you guys down the road.
Appreciate it.
So with that, Owen Dashner, see us out.
On behalf of REIA Radio, Aiden Bear, and Ted Kaasch, I'm Owen Dashner. You've been listening to Dane. My life's mission is to steal deals from Owen Dashner, Petersen,
And Jake Ethel.
Sign off.